brought to you by Michelin Canada. Michelin, a better way forward.
The trucking taxation world is one that's confusing to many owner-operators and small fleets, and even individuals that have spent their lifetime studying it, like Scott Taylor, Vice President of Transport Financial Services. We brought him in today to talk about some of the key issues and decisions that owner-operators must make when they're running their businesses. So Scott, can you tell us a little bit about who you are and why this is a subject matter that's of interest to you?
Sure, absolutely. The company I work for, Transport Financial Services, has been in the owner-operator accounting business for 38 years. I personally are coming up on a 25th anniversary, I think, here in the next year or so. So taxes is what we always have done. It's what I do every day. In addition, we have expanded to fuel tax, logbook auditing, permitting, plating, sort of being a circle of services for owner-operators and small business in trucking.
One of the age-old questions facing owner-operators is whether or not to incorporate. And I understand that year to year there could be changes, legislative changes that swing the pendulum in favor or against incorporating. So can you bring us up to speed on the latest and why an owner-operator may or may not want to incorporate his business?
Sure, absolutely. The question of incorporating has been around for owner-operators in trucking for many years. In the past, the discussion, of course, a big part of that is taxes and what is it going to save for me? Why would I, there is some extra expenses involved in an organization to do that and to run it. The question's always also been concerning about liability issues, and as the driver or owner of this business, if I'm incorporated and there's an accident or there's a bad debt to face, is it going to help me out? But I try to obviously stick to the tax size and advise people, but get them to see a lawyer for the liability issues. On the tax side of things, it's quite simply that Revenue Canada was changing their focus on meals, and how for years sole proprietors were all allowed to, like drivers, use their logbooks for meal claims. Revenue Canada has decided that that no longer is going to be allowed, that now you have to be an employee to get a meal claim using your logbook, using your TL2 methods. So the way to get around that for owner-operators then is to incorporate, because now, besides being the shareholder and the president and the garbage service for the corporation, you are also then an employee of it. So when you are driving that truck, you are going to get your T4 from I Own My Company, Inc., and you're going to get your T4, and using your logbooks is a completely legitimate way of claiming your meals. And now you are out of that potential hassle with Revenue Canada on claiming meals. Because claiming, for all these years I've done this, and people that do and don't eat a lot on the road, no one has ever brought in to me thousands and thousands of dollars of meal receipts. It just doesn't happen. So when you're looking at $17 a meal, 3 meals a day at 80% now, that's a lot of money every day that you could be deducting and then of course saving taxes on. And to not do that and to stay as a sole proprietor, you might be giving up a lot of money. Of course, it depends on what kind of routes you're running. Trucking has changed as well. People are doing more smaller loops. They're not necessarily leaving on Sunday night and coming home Friday night. People are home more often, so that logbook may or may not be a big deal if you're not gone 12 hours sleeping on the road. Your meals might only be 50% if you're not sleeping on the road and gone for the required number of hours and distance. But if you're at 80% and you're gone most of a week, it certainly can add up to a lot of money.
Okay, it sounds like a little bit of work now could save you a lot of hassle down the road if you incorporate.
Absolutely. I think that oftentimes incorporating, quite frankly, just scares people away. And yes, anyone would be lying to say that it's not a little bit more work. But I think, like anything, any old dog can learn a new trick. And if you got through that first year of doing it, and with the right kind of help to make things as simple as possible, it can easily be managed. And I think in the long run, most people are happy that they have done it. There just seems to be more options on tax planning and dealing with banks and dealing with Revenue Canada. Over all these years, I can't tell you how many times people have told me that a year or two into it, they can't believe how it just seems like they have more money. And I think the structure of a corporation just makes people budget and just look at things a little bit differently, and then ultimately they just run their business better.
Okay, perhaps it makes you become more disciplined. Now, if you incorporate, do you not need president, shareholder, CEO? Can you be all of the above, or is there an opportunity to assign positions to other people in the family? Is that something you have to be concerned about, or?
Well, yes, definitely. You can't. First of all, you can be everything, right? You can be the president. You can be the shareholder, the president, the directors. One person can have all those roles. Another complication of the thing is deciding whether or not you want typically mom or your spouse, dad, I guess, or the kids involved in any way, shape, or form. And unfortunately, like most things in life, there never is an easy answer. There's never a clear black and white straight ahead answer. There's always pros to bringing in your spouse into the business, whether it's by title or by actions of what they're doing, and there's cons to it. So again, that answer could change too. If your spouse is working someplace else or is not working, the fact that they own shares in the company might influence their unemployment insurance claims one day if they ever got laid off, or it might planning on them having a pregnancy leave one day, and you may not have had that set up properly as well. So Revenue Canada always seems to stick their nose in these family situations, these non-arm's length situations, and you call them and ask them, and they'll tell you to send in unemployment insurance premiums or set up or do things a certain way, and then when you want to make a claim, they can come back around and tell you no. So that one thing that definitely that they've focused on more, and we have too with our clients, is getting assessments done by Revenue Canada, and then you've got it in writing that they've reviewed your situation, and then that they're showing you that, or telling you, excuse me, that they've confirmed that you're setting things up right.
So to incorporate sounds in many cases it would be a good idea, provided you do it the right way.
Right. Any good idea can go wrong, so you have to do it the right way. If you're just going to go to someone who's not going to ask you some questions about you and your family and what's going on today in your family and what you would like to see going on tomorrow, and they're just going to give you a cookie-cutter corporation, well then you're obviously not dealing at the right place, despite whatever money you may or may not be saving. Okay. They're not giving you what you need.
Okay. Now, you've made a compelling case for incorporating. Are there instances where you'd be better off not incorporating your business?
Well, I certainly think that, again, back to the point where some people are scared of it. I guess if you're brand new and you want to get into learning, to be a business person and be an owner-operator, sometimes it just seems like a mountain. It's one more thing that will scare somebody away. Conversely, if you've always been a sole proprietor and you're going to be done retiring, getting out of business in a year or two or three down the road, it might not be worth your time doing it either, because it does generally take, like I said, for sure a year, maybe two before some of the benefits tax-wise even click in. Never mind, you're comfortable with it, you're running it, things make sense to you.
Okay. In your experience, do carriers out there have a preference when they're looking to hire owner-operators?
I don't think I'm not sure what, I hate to use the word a lot or a little bit, but certainly it happens out there. We have some of our clients we've incorporated in the last little bit, because they have moved from one carrier to another and the carrier has wanted them to incorporate. Or quite frankly, that's how we get some new business too, because people know that we can do that for them and we'll look after that and make sure it's done right. So they'll contact us too. So certainly that thinking is out there. And overall, I just think that a lot of carriers will recognize that if someone is incorporated and running that way, they just feel that that person has spent and is willing to spend the extra 2 minutes to make sure things are done right. They've put a little bit of extra effort into doing things.